Here we go, guys. Friday, November 4th, looking at the micro futures today. Starting off with oil, actually the West Texas Intermediate. And you can play these micro futures and hedge against, rising, fuel costs, gas, diesel, whatever, by going long. In this case, we're already up about $900 on oil. The micro futures we got in just the other day right here on this green candle at this support where our blue dash line is. And we teach you all this, in the course. So yeah, as oil goes up, we're looking for a minimum of $97. And if they run it up per barrel, and if they run it to 97, they'll spike it or wick it up to 100. Okay, those markets love those whole round even numbers, and that's where they'll run it to. And even at 100, we'll keep long until we get a confirmation of a potential pullback, and then we'll go short oil, and we'll play it both directions, just like any other institution or industry that longs or shorts or hedges on these micro futures or standard futures. And we look at the micro futures. They take very little initial, risk capital to be involved, as opposed to the standard futures or even, stocks, and ETFs, and then the tax benefits. But all that is explained in our course. But right now, as you see, we're long oil, looking for a, potential target of 100 to begin with. Now we're going to look at gold and silver. And as you can see, gold had, now they're close together, but somewhat of a triple bottom here, or at least 3 wicks down into that 1620. So the market seems to be defending around that 1620 area. And then, of course, we're having a nice breakout, bullish engulfing, takeout clearing candle. Looks like we're going to come up and retest this down trend line. And that's another reason, for the micro futures, you can play oil, that's what we just talked about. You can play gold or silver to the upside or downside. As you can see, this leg down, we were short gold and silver as they were coming back in. And we'll just talk about gold right now. And we were short down, coming down into it. So it doesn't really matter where you had bought your gold at. You can hedge that price, and no one wants to take all their gold, all their silver, whatever, box it all up, put it on a two-wheeler, drag it to the post office or wherever, and get the insurance to mail it back to wherever you got it, or throw it in the back of your car, take it to the local coin dealer in your town and sell it at whenever you think it's coming down. And then buy it back when you think it's going up. You're going to get caught in the middle, and it's not going to be worth it. So these micro futures, you can get in, very little initial, risk capital to get going, hedge it on the way down. And then when you see the rally, and we teach all that in the course as well, how to, see the breakouts, the breakdowns, etc. And then you just switch it, to long, and or take some of those profits that you made on the way down, and then buy you some more gold, buy you some more silver, So I'm not going to say it pays for itself, but it definitely knocks a lot, of the price off of it. And then let's look at silver real quick. And yeah, so we're having a great day. We have some setups already, and we teach you to do that as well. And as you can see, we're making, low, a little higher low, higher low, higher low. So looks like we're on a nice little trend up. Now the next place with possible resistance is right here at this high pivot. We're expecting, 21 plus, 2150 silver near future. And as we come up into the 200, of course, you're going to get little pullbacks because you have to, pull back in order to go higher there, build that consolidation zone. So that is what we're looking at. And then the dollar, it's all, of course, contingent on the dollar. And we knew exactly where the dollar was going to pull back at. as we, came down. Matter of fact, we even have our potential support zone already here as well. But as you can see, you can look at our, post on Twitter under Crypto Charts Joe. We were looking at this for days, looking at this 113 being real strong resistance. And there's a couple other factors, but one was this long-term white uptrend line, this high pivot here. And then there was a couple other things that were other factors. And the more factors you have, higher odds, higher probability that your thesis is going to work out, and that's what we teach as well. And per classical technical analysis, when you break an uptrend line, and most times you'll do it on the fourth or fifth hit. So we had 1, 2, let me get rid of that so you can see. We had 1, 2, 3 hit. So on the fourth came under, and like we were talking about, most times once you break support, you'll come up, retest it, and see if it's going to be resistance, and then you roll over. And another reason why the market does that, because it'll break, retail crowd will get in, short or long, depending on which side, the line that you're on that it breaks, and then the market makers, will run it back the opposite way. Retail will go, oh my goodness, I made the wrong decision. And then what do? They stop out, go long, and then now they're having to, stop out their long position and go short again. Okay, so we teach you those Wall Street tricks so you don't get duped. But okay, guys, thanks for watching. Thanks for checking us out, and we will see you on the charts.